Hello everyone and welcome to another webinar with Ben and Roman about the smart money concept. How are you doing, Roman?
Hello. Hello, I'm doing good. How are you?
Yeah, I'm great as well. Excited for what you have to show us today. I hear it's about interesting points, so you've got my interest.
Points of interest.
Sorry, points of interest. And how's everyone doing in the chat? Did you learn a lot from the liquidity session last week? It was one of our better viewed videos, so I guess people find it very interesting, just to see all those liquidity levels forming and then getting swept by the big players.
It's a pretty fundamental thing that is really important to know. So
yeah.
No wonder, it's got a lot of views.
Yeah, no, I've been trying to place a few trades and failing miserably, but
that's okay.
I had one successful trade this morning. Successful. It closed my stop loss in profit, but so I can't say it's a full success, but it wasn't a total loss either. Then the next position I got after that was a loss. So yeah, always good. Right. So
I wasn't able to get any good positions recently because the market is so unpredictable.
Yeah, you were saying that the market was like very choppy and lots of wicks taken out, price levels that you didn't expect.
Yeah.
So I'm gonna get the chart in. There we go. Now we should have the chart. So it's up to you, Roman. Take us through the magic journey of order blocks, point of interest, and whatever items you have for us.
Yeah, so as you remember, we have this smart money in a nutshell scheme that basically explains everything about smart money, like the most common strategy. So basically, all you need to do is just figure out the structure on the high time frame, find your points of interest, wait for the price to retest this point of interest, and then find the reversal pattern on the lower time frame. And so what we're going to do today is we will learn about the points of interest. So this is one of the most important things.
Okay.
After figuring out the structure.
Good. You've got my attention. Point of interest.
Do you know any points of interest?
I know the fair value gap.
Yep.
And I know the buy side liquidity and the sell side liquidity.
Yep.
And then you have the internal liquidity.
Yep.
So are there any more?
Yeah. There is also order block and breaker block and rejection block.
That's a lot of blocks.
Usually, a lot of blocks. Usually you want to look at them at this specific order. So liquidity is your most important point of interest. Then fair value gaps, then all other blocks. We can combine them into one step, actually. And you need to remember that point of interest is not your entry signal. You don't need to enter blindly at every point of interest, because most likely you will get stopped out.
Yeah, but that's probably what happened to me, because I was just hunting for entries, but I guess it's wrong to hunt for entries. They should come to you.
If we look at this example, you can see that here we have this fair value gap, and we do not place our entry right here or here blindly before we see what happens inside this area, because there most likely was some fair value gap here as well, but it didn't provide any reaction. And maybe we had another fair value gap here above. So you have to wait for the price to come into this area, and then you need to switch to lower time frame and find this Quasimodo reversal pattern. And only after you get this shift, only then you can enter a trade, either from here, like this, targeting the swing high, or we can find some lower points for better risk reward ratio, but we can start with entering here. This is a good point.
Yeah, because there is a high probability that the price after it breaks out, that it still reverses a little bit before actually moving up, right? It's hardly ever a full lineup straight away. So you have the breakout and then maybe an entry into the fair value gap again before it breaks out.
Yeah, you can also have some fair value gaps here within this lower time frame zone. So you can place your entries here if you want. If you notice that.
Yeah, that's what I was doing actually on the Bitcoin market. Although I'm not entirely sure if it was trading in a 4-hour or 1 hour fair value gap, but it was definitely on the lower time frame. There was a fair value gap that I was entering into after I saw this Quasimodo move.
Yeah, you need to make sure that you trade this move only within or right after the point of interest, because you cannot trade it if it's just somewhere randomly on the chart like this. It wouldn't make sense, like here. Only if this is a reaction to a specific point of interest.
Right.
So if you don't have any points of interest and you see this, you better skip that.
Okay. Yeah. So the Quasimodo move is only in a point of interest and not outside.
Yeah. So basically, this move is like the first, first example or of the reversal. So we have this move down, and when the price gets into the point of interest, the point of a lot of trading, high volume trading, most usually, and then when you see this market shift, when it crosses this red line, then this is the first indication of the potential reversal. So that's why we can start entering the position. Okay, so let's get to the points of interest. So we have this fair value gap. I hope everyone knows how it looks by now. So it is basically,
and if you don't,
a gap.
set the indicator on and it'll be drawn for you.
Yeah, we have a nice indicator that we'll show later. And yeah, so a fair value gap is basically a gap between the high of first candle and low of the third candle. And if it's a bearish structure, then it will be reversed. So this is our first point of interest.
Does the color of the candle matter? So this one can be like a bullish candle or bearish candle, and this one
doesn't matter.
Doesn't matter.
Yeah, like this can be red candle, for example. These two will be green most likely, and this one can be red as well. But green will be like this. But you still have this gap, so it doesn't matter. You have this gap, and it is the point of interest.
Okay.
Yeah, and so we have multiple variations of the fair value gap, depending on the level, how much the price dropped into this area. So we have the first one called entry drill, when price just slightly dipped into the fair value gap without crossing this middle line. Sometimes it happens that price just dips here and goes up, or down if it's a bearish trend.
Mm-hmm.
But I have problems trading these. I don't know. I don't trust these. But my mentor said that he only trades these. So yeah, I'm quite confused.
I suppose it's a matter of backtesting and see what's comfortable for you, right?
Yeah, I need to backtest and see. But yeah, it's really hard to trust these because I still want to see a bigger dip down.
Yeah, it also increases your profitability, of course. If you can wait, if you can wait until the full fill of the fair value gap, then you can get that extra more profit.
Yeah. Well, what I noticed is that this entry drill usually works when you have a really quick move up and price goes like really quickly going up, and then it just dips into fair value gap and continues going up again. We'll see that on the chart later. But yeah, it's just so you know that there are 3 different types of fair value gap interactions with the price. So first one is entry drill, when it doesn't reach the middle of it. Second one is when it reaches the middle point, but doesn't fill it completely. So this will be the 50%. And the last one is full fill, when price completely covers the fair value gap and then continues going up. So yeah, there are like not a significant difference in terms of the performance, but this is something to look after when you're backtesting to see which ones work better for you.
Can it also do some double dipping into the fair value gap?
Yeah, it is possible, but usually you don't want to trade a fair value gap when it's tested multiple times. Like second time is okay, but when it's more, it's better to skip it.
Yeah. Okay.
And especially if it was fulfilled already, then yeah, you should be really
careful, because it can be an inverse fair value gap.
Yeah. I mean, it has been filled, then price had some reaction, but then the chance that it will react again, moving the price up, is really low. But again, you just need to backtest it. And I also need to backtest it too, because I don't have too much experience yet. Okay, so next we have the blocks, the order block, the breakout block, and the rejection block. The order block is usually described like the last bearish candle before the uptrend or the last bullish candle before the downtrend. Like this one, we can see the last bearish candle. This would be the order block. And then we would expect the price to go up and then get back into this area and then continue going up. But there is also a fair value gap here as well. So you'd have 2 points of interest within this area. So double your chances.
Is that then a better entry position?
I mean,
because right now
again,
it'll just blow past the fair value gap, so perhaps that didn't hold any value.
Yeah, that's why we have to look on the lower time frame for the reversal. So you don't blindly enter here. You wait until the price gets into any of the points of interest, and then if you see that reversal pattern, then you can enter the position. So like the whole point of this smart money is in synchronizing the time frames and the moves of the market. So we want to have this point of interest on higher time frame, and then we want to see a reversal on the lower time frame.
I see.
Yeah. So with the order blocks, they also can get a little tricky because different traders have different approaches. So for example, if you would trade Forex, they usually don't include wicks. So they would draw it like this, for example, which is still weird for me. I didn't backtest Forex yet. Then also some traders, and especially myself, I prefer to just use this last candle before the move up, and specifically the candle that created the fair value gap after it. So this would be order block for me. And also there might be the case when you have a really huge wick here, and if you draw it like this, then you have a question like, do you need to include this wick as well? Or do you need to only include this candle? So that's why order blocks are a little tricky to me.
Yeah, they like from the times that you've tried to explain it to me, is like, okay, so what is the rule? and so far I don't have a rule yet. Like it's like,
yeah,
it's always like it depends, and that's very difficult, of course, to make an algorithm.
There is one very important rule that I didn't mention yet, is that order block has to take out some liquidity first. So if it happens out of nowhere, it's not an order block. So it has to work with liquidity. let's say you had some movement here, and then you took out this liquidity, and price went up. So this would be a valid order block because it took out some liquidity. And if you didn't have anything here, then you would better skip that.
Right.
Okay. So next one would be the breaker block. And basically the breaker block is the failed order block. It is the same as the order block, and it has the same issues with drawing it correctly. So you can draw it like this from this candle or from this last bullish candle before the downtrend. But basically, breaker block is when we form this order block, then we take out liquidity here from this low, and then we break through this order block. Then it becomes the breaker block. And what we expect is the price to come back into this area and then continue going up.
Oh, wow. This is going to be a nightmare to spot.
Not really. Like, if you already can spot the Quasimodo, it is basically the same. So you'd have this. It's basically the Quasimodo.
Yeah.
It's just that you still need this one candle that is the order block, the breaker block.
We get a question like, how can we make this a setting? But I'm not sure if you're referring to the indicator, but breaker blocks and order blocks are not part of the indicator yet.
Okay, so can you see the similarities with the Quasimodo?
Yeah, I mean, kinda.
Yeah, it is pretty much the same, but the only difference is that you need to spot it on the higher time frame, not on the lower time frame.
I mean, yeah, I mean, I definitely see this move. But to find the failed breaker block, yeah.
Yeah, so imagine if we didn't have, let me, we would have it like this. You would just have
right, so it would be an order block first.
Right.
Yeah, I see. So you would mark it as an order block first, and then because it's an order block that is fulfilled, then it turns into a breaker block.
Yep.
Aha, there we go. Light bulb moment.
Yeah, it's that easy. So the most difficult is to learn how to actually draw it, because I would draw it like this from this candle, but some traders would draw it like this. And again, Forex traders would draw it like this. So it depends on your backtest and your strategy. So like you all need to test it.
Yeah.
And see what works and what not. Okay, and the last one is the rejection block. And basically what it is just a huge wick that appears after big dumps. You usually see this after like Bitcoin dropped or any other market dropped a lot within few hours. You see this huge wick, and what is expected is the price to come back into this area and either continue going up if you see the reversal pattern, or usually price goes down. But it is also a point of interest, so you can observe it.
Right.
And also with the rejection block, most traders look for this middle line. So the 50% of this rejection block is usually the great entry area. If you notice this reversal pattern within this area.
So if that happens around the middle line, then it could be a good entry.
Yeah. But yeah, I actually, like, I never was able to trade it. So still need to practice with it. Okay, yeah, and that's basically it for the theory.
Okay, yeah, we're
Let me know if you
going to
have
need to see a
any questions.
lot of examples for it to start to make some sense, I suppose. I mean the order block is. I mean the difficult part about the order block is that it's just like debatable what exactly classifies as an order block. But I mean, if you draw a box somewhere close to liquidity at the bottom of a swing, yeah, you're most likely in an order block. At least that's how I see it now. But and then the breaker block is just a failed order block. So once it moves in there, then or once it fulfills an order block, then it's a breaker block.
Also, there is the one trick on how to properly identify the order block again. So right now you would see this. Let me move it separately. So these two candles. Let's say this is a daily time frame, but if you would switch to 1 hour or maybe 4 hour time frame, what you would see is this. This would be your order block. So it's again the same Quasimodo reversal pattern, but on the lower time frame. And this would usually create this order block.
Okay.
Okay, so we can get to examples. I have some drawings here for you. And this is one example that I told you before. So order block has to take out liquidity first. And it means that if we have this all-time high zone, this usually would not be the order block because it didn't take liquidity. There was no liquidity on this side. But sometimes it still works.
It's the sometimes is that's the one that kills me. It's not an order block. Well, sometimes it is.
Yeah, I mean, there was still some trading patterns within it, but yeah, I wouldn't mark it as order block. And this one, it actually, it worked with some probably higher time frame fair value gap, but yeah, it's hard to say. So we can actually remove this one and skip it. Instead, we could draw the fair value gap here. So yeah, so here are the examples. This will be fair value gap. Price didn't reach it. It dropped down and then created this order block. And yeah, this is the problems that I told you. So some traders would mark this as the order block, this whole bullish candle before the downtrend. But to me, I prefer to do it like this.
Right. And why is this not an order block for bullish?
Yeah, this could be the order block, the bullish one.
Okay.
But yeah, we're in the downtrend, so.
Right. So in a downtrend, you normally don't use bullish order blocks.
Yeah.
Okay. Good point.
So again, here could be another order block. Price reacted from it and continued going down. And then here.
There was also fair value gap.
Yeah. Here fair value gap and
even higher,
here as well.
There, so that was a full fill. So this is the good example of where the fair value gap and the order block are close to each other. So then you might want to discard the fair value gap in that case and just wait for the order block to be entered. Or not?
I mean, in my approach and how I draw the order blocks, so I prefer to mark only those order blocks that created the fair value gap. So in my case, I will always have fair value gap and order block next to each other.
Okay, but then would you would just wait for the market to make that Quasimodo move on the lower time frame, and it can happen in the fair value gap or it can happen in the order block.
Yeah. So let's check the lower time frame here. In our case, the shift would be right here. This is too far, not ideal. So we'll set something like this. Yeah, not the best risk reward ratio.
Yeah, it looks like it's gonna hit it, or just touch it. Well, you didn't. Yeah, you did. You just placed it, but you missed this liquidity here.
I mean, it
touched this liquidity really well here. Yeah, and it works. I mean,
yeah. So as you can see, I wouldn't place my entry right here, even though in this case it would work out and it would be even better trade. But we never know if price continues going up from here. So that's why we need to wait for this shift in market structure.
You need to have that confirmation that the trend is going to continue to go down. And this was just that swing to take out the liquidity and then move back to the lower sides of the liquidity, that what we were talking about last week, where you can see that liquidity just moved out. Yeah, so we had this liquidity and this liquidity here that was ultimately taken out by this move.
Mm-hmm. Yeah, so on lower time frame, it is basically a compression or just a lot of liquidity that has been taken out.
Yeah.
Yeah, and here is an example of the breaker block. So as you can see, we would move here.
Yeah, so right now it would be the order block. Yeah. And then as soon as the price fulfills it, then it becomes the breaker block. And then it's an entry so you're looking for this type of entry?
Yeah, it is for the longs. Yeah. So, well, basically you just have the change of character here. So your structure is shifting from the bearish to bullish.
Mm-hmm.
And
so then you need to wait for the confirmation, right? So you need another break of structure before entering long positions.
I mean, sometimes yes. It depends. I mean, some traders prefer to wait for the confirmation, and some traders are just not patient enough, and they trade every possible breakout and change of structure, change of character. So it depends on your approach. If you want to be conservative, you can wait for the confirmation and only then trade the bullish structure. But you can also risk it.
Yeah, I think I'm going to be one of those people that risk it. I'm not patient enough.
Yeah, let's see what happens there. Yeah, that wasn't really good entry because this shift is really far away from this breaker block. Not ideal. It's like huge stop loss, and I don't know where to target. Take profits.
This would be a very difficult position to take.
Yeah, and also, again, there is a lot of liquidity below that makes it really tricky. So yeah, I'm not sure how I would trade this one. But I don't know, it looks bullish slightly.
Well, yeah, you could have waited for this to happen, right? For it to enter that order block.
Yeah, so after that breaker block, we had a move up and then it created the order block. And then let's see if we had any entries here. Here, yeah. So here we would have, yeah, this one would be the entry I drew before. So you would have something like this, and then you would need to wait price to come back within this area. But it probably never did. Yeah, it went too fast. But yeah, that happens sometimes. And a lot of traders prefer to open market positions, like market buy orders right here after the candle close.
Maybe that's even what caused
Or
the rapid spike.
Maybe, yeah. But yeah, I cannot trade with market orders because I don't know. It's too scary to me. And again, yeah, I just need to backtest everything and see if this really makes sense.
Yeah.
So here we have this fair value gap, then another fair value gap here. We can see if anything interesting happened here. Again, the shift would be too high. This wouldn't be the shift, I guess.
Nice. I just got stopped out of another position.
Time to learn. Yeah, so this is the example that I wanted to show you. You can see that right before this happened, we have this order block, and then right next to it, we have a lot of liquidity at the bottom. You see that?
Yeah.
And also fair value gap here as well. And when you have your point of interest combined with a lot of liquidity like this, like with huge bounces right before the point of interest,
but
it usually makes your...
Wouldn't this also be the order block then?
Yeah, it would be.
So you have like, you have them like stacked 3 together.
Yeah. I mean, I didn't mark it. I don't know. To me, as I said,
it might have already been taken
block,
out. Yeah.
It would be like this. It could be a good entry, actually. No, there was like just this move. Probably some news. Yeah, so when you have your points of interest combined with this liquidity, these huge swings right before the point of interest, this usually makes your points of interest much stronger. And this becomes a huge magnet. And
I mean, it's also like a classical setup for a sweep, right?
Yeah. I mean, this red line is already a huge magnet for a sweep.
Yeah. Because you know that when the price moves down, there's going to be a ton of stop orders right there. Yeah. Because this was such a massive move up. You just know that there's a lot of liquidity below this level.
Yeah. And so usually when you have this, it almost guarantees that your point of interest will be very strong and that the price will get there sooner or later, and then it will probably bounce right from it. When you have this combination of liquidity and point of interest, this will be, this is already external liquidity, right? Yeah, this is the swing low. So it basically made this sweep and continue going up. Yeah, nice.
But very difficult for entry.
Yeah.
Because now we need to wait for the Quasimodo move, but it's already like halfway back up to profit.
Yeah, your Quasimodo would be right here.
But you said that your does your mentor then still wait for the Quasimodo after it did an entry drill in the fair value gap, or does he enter straight away? No, he doesn't, right? Because you need to wait for that Quasimodo move.
Yeah, you need to wait for the confirmation. And sometimes they use different types of confirmation, not just the Quasimodo, but they are more advanced, and we will get to them later. So again, here you can see we have this liquidity and then points of interest.
We're on the daily, so
yeah, it's daily.
Would there would have been an entry maybe?
Yeah, it could be, but it's this
only
would
breaking,
be a very bad entry at this point.
It's only breaking it here, right?
You could say that.
Oh, you're going. Sure. Oh, wow.
Oh, no. It wouldn't be the Quasimodo here. So yeah, it would be just here. And this is already too far. But yeah, then we had this sweep. So you could try to enter here. This would be this Quasimodo.
Yeah, so the entry would be here. But it doesn't look like it's going to reach that because now we're too far. So then perhaps the entry is then that entry right there?
Yeah, you could enter with market order there. But actually, let me see, because this... Yeah, this already becomes bearish. You can see this sideways movement here. So yeah, it is already the change of character here, or even here. So we would better start looking for the short positions there.
Right. So this could have been the Quasimodo move for that.
Yeah. So we had this fair value gap here. And if I switch to the 1 hour, this would be the shift. And you could enter like this.
It's not a great risk to reward. 1.6.
Yeah, I mean, this is conservative because you're aiming to this closest swing low.
Yeah.
But you could target this order block if you would want. Or you could have one take profit around here and then second one lower.
Yeah, which would still give you a nice risk-reward ratio.
Yeah.
Oh, and we have a question from George about the Fibonacci bar. You can see the green and red fields. What do these marked fields mean?
I mean this, right?
Yeah,
in the indicator?
That one.
Yeah, this is the optimal trade entry. Or first of all, it is the premium discount zone. So bit like this. Yeah, so we have the change of character. Price broke out here. So we have the swing low here, the swing high here. It's marked with 4-hour sell side liquidity and 4-hour buy side liquidity. And then what we do is that we just drag these Fibonacci retracement like this, and it shows us the premium and discount zone. So for the shorts, we want to trade within this area, the upper area of the Fibonacci. And for the longs, it would be reversed, would be at the bottom.
Yeah, but some people call it the discount zone. at the bottom,
Yeah.
always. And
so this area that is marked here is called optimal trade entry. So that's why it is marked on the indicator as well.
Yeah.
And we can actually see how it works.
so it just touched
Yeah, it touched this.
the middle of the 0.5 level of Fibonacci, the middle level.
Yeah, and it touched this fair value gap and continued going down. For now, at least.
I like how this looks in the replay mode. Just POI stands for point of interest. Someone asks, what is POI in trading? And it means the point of interest. And from this one, it would be either the fair value gaps, the order blocks, or the reversal blocks, and breaker blocks if we have them. Those are points of interest. And in those trading zones, we would be looking for entries based on the Quasimodo model.
Yeah, right. So these are the places where we can expect the reversal and where it usually happens.
Yep.
And when you combine the points of interest with this premium discount zone, it becomes even stronger.
Yeah, because what you were showing me somewhere last week was about other entries that could happen inside or outside of the optimal trade entry, right?
Yeah.
So once the optimal trade entry has been reached, then it still has a long way to move to, in this case, the sell side liquidity. And there are trades to be made on its way down to the sell side liquidity as well, based on different types of setups. So don't stare blindly on the Fibonacci range. Once the Fibonacci range has been touched and taken out, then there are still trade opportunities, but we will discuss them in a later episode.
Yeah, it will be about the order flow. And this is more advanced topic. And we need to learn the basics first.
Yeah.
Yeah, so in this case, we had this, even this touch of the middle point of the fair value gap. But we didn't, we had this shift, but it was really hard to get candle close above the shift. You had to be very careful and very, you'd have to be around the chart to notice this move. It was really easy to miss. And probably I would miss it.
It would have been a beautiful one, though. Oh my God.
Yeah.
4.7. Can you imagine if you had a 1% risk on your portfolio? You would have just made 4% on your portfolio. That's just insane.
Or 100% risk with 200 leverage.
Yeah. Yeah, that's how we're going to get those Lambos, Roman. Just blow it all on one trade.
Yeah. Yeah, and this is an example as you discussed before. So we have this fair value gap here. It is daily fair value gap. And if we switch to 1 hour, we could see the shift probably around here. And you could open another short position from here, placing your stop loss around this area and targeting the swing low again. So this is an example when you don't need to trade in the premium discount zone. You can just notice the movement. You see the market is going down, and you can just take any fair value gap on its way.
Yeah, so you're still looking for the points of interest to find those entries, right? You wouldn't take a position outside of a a point of interest. So only be looking for entries after the price has moved into a point of interest. Because Highway Dream asked, like, what is the importance of the point of interest? Well, that's exactly where you're going to be looking for trade entries. They don't always exist, as we've seen in this example before. Like sometimes the price just moves too quickly for you to catch that entry, and you don't have the right confirmation. But then we just wait for the next fair value gap or the next order block to be reached. Like we're not going to chase trades. That's when you start gambling.
Yeah, and also there is a logic behind these areas. So fair value gaps are usually the areas where there was not too many trading. Like it's usually, in this case, would be a lot of selling, but not too many buys in this area. And what markets usually wants to do is to rebalance. So also it's called imbalance, not just fair value gap. It's also called imbalance. And price usually want to rebalance again. So traders who didn't buy here, I don't know, sometimes they just, price gets back in this area to rebalance and continue going down.
Yeah.
And if you just open the chart and start like marking every fair value gap, you'd see that it is usually being tested or fulfilled at some point. Like this one wasn't tested right away, but then price come back here and has some reaction. And it goes with every fair value gap usually.
So when you see, like, because I was asking you today about like how far back do you look, right? Because that at some point you have, like, especially after a major pump, then your range would be massive. But that doesn't mean that you can't be looking for any internal swings like this. At some point you're going to have to take that long range with a grain of salt. But as soon as you hit an empty space, then you can look back for that previous fair value gap, so that you have some kind of reference to hold on to.
Yeah, and usually this area would be quite significant on even a higher time frame. So if we check weekly, you can see a huge fair value gap here. And you can see price just
touched the middle line,
the middle point,
and then went by.
Yeah.
But there's still a high chance that it will take out the full gap, right? That's what usually still happens. Although this is not an all-time high situation. Yeah.
At some point it happens.
Yeah.
So so fair value gaps or imbalance are the places where the price wants to come back to rebalance again. And order blocks are usually the places where a lot of trades have been made, a lot of positions were opened, and sometimes not all of them were opened, especially if we talk about the smart money and they have large amounts, they cannot place all their orders right away. So let's say we have this order block, they started selling, but they might still have some sell orders around here placed, waiting for the price to come back. And yeah, we can see that something actually happened there. Price came back into this area, and then we have another wave of selling. It doesn't mean that you need to mark every order block. And if you're trading in March this year, you don't need to look at this order block that was a year ago, but you need to keep it in mind that something happened there, and you might expect the bearish narrative around this area. And usually you would take this just as a target. So when you start trading and when you start analyzing the market, you would go to the highest time frame, like this one, and you would start marking every area. So this would be buy side liquidity. This could be the target. I don't see it in monthly. then you have fair value gap here. So many things. So these would be just the targets. And if you were trading around this area, where is that? So this line would be the target. It would be fair value gap fulfill. And it was weekly. So we can say weekly fair value gap fulfill. And if you would open any positions, let's say in this fair value gap, you could also aim towards this fulfill area.
Yeah,
so this would be just the target.
Yeah, and that's a nice risk reward ratio.
Yeah, I mean, it is pretty random. Yeah, we didn't have proper confirmation in this area, but it's just an example. So that's why these points of interest, they have some meaning behind it. They have importance, and that's why we expect major movements within these areas. And they don't happen every time. And that's why we need to look for the reversal and not just trade blindly.
Yeah. So that Quasimodo pattern is super important for now until we learn the more advanced confirmation patterns.
Yeah, and you can just go back to any chart, draw these lines, and then see how market reacts to these. So it's usually just bouncing around liquidity and these points of interest.
Yeah, touched it again.
Yeah, so right now we can see that we just touched this order block. And who knows, we might have... Yeah, there was actually a possible short position here. And you might be even able to still enter it if price comes back. So you can enter with market order.
We're back live.
Yeah.
This
could be the position.
Oh, let me log in. Well, but with the stop loss set there, yeah, from the bottom of the Quasimodo in this case.
Yeah, exactly.
Yeah. I mean, I'm feeling bearish today, so I might still take this one. I need to make up for my losses.
Yeah, we can see there was this fulfillment of the fair value gap on the 4-hour time frame. So yeah, this could be a really good target. Though, like, I didn't even want market to go there. I want my spot positions to rise.
I don't get it. I mean, why did I enter a long position there? I was... I'm looking at my Bitcoin trade now, and it's just terrible. Maybe I can show it. Can you? You might not see it, right?
Yeah, I can see it on stream.
You can see it there. Futures, Binance. Yeah. I mean, these are just terrible. Oh, wait. Yeah. I mean, let's add the indicators. Smart money. And I was using it on the 1 hour, actually. Why did I enter here? I don't remember.
Yeah, you had this fair value gap, but overall it was a better structure. So I don't know.
Well, actually, this is what I'm really bummed out about, because I had my short set up at this 1 hour fair value gap, and it just didn't hit. It just didn't hit. But man, can you imagine? I would have been. I literally had that set up this morning, and it just
happened to me a lot.
It just missed it, and then I tried to get in on these on the other two trades, and that's just, that's when it went wrong. So I had closed it with slight profit here, but then this was just a loss. Oh well. Let's try
I mean,
again.
it could have been much worse. So.
Oh yeah, no, I'm happy I closed it. But did I? Ooh, I don't know. No, I messed it up. Okay, let's not look at this anymore. So this is what I mean. This is kind of like a preview of what we'll be doing, right? I'm going to show you risking my money, because this was a live account. Risking my money, showing you how to fail and learn from failure, right? That's what we'll be doing. I'm gonna write these down in my Notion log, and then sleep on them, kick myself a few times, dust myself off, and get back in the game, because that's trading, right?
Yeah, you need to fail a lot and then learn from your mistakes.
Yeah,
to get better.
Yeah.
But again, you don't have the full knowledge of the strategy yet, so that's okay.
Yeah, I blame it on I blame it on a lack of knowledge, Roman, and that's ultimately your responsibility. So you owe me. No, only joking. Wow, already an hour has passed. Time flies when you're learning.
Yeah. Now I just need to go and do some backtesting.
Yeah, maybe, because I've skipped that step. I think the proper backtesting sessions, I've skipped it, and I went straight in at first, risking money and failing miserably so far.
Yeah, that's the first step usually.
Yeah, first you need to fail hard, because you need to get that reality in and say, like, no, you can't do this yet, because you need to do the backtesting first. Train your eyes first before you risk money. So I'm getting there. I'm going to risk, I don't know, I'm going to probably blow half my account before that realization really kicks in, and then be forced to go back to backtesting. It's the classic mistake, so I just need to make it, right?
Right. Yeah. I mean, we need to do some backtesting together, but probably we can do that in a couple of streams. I think maybe in 2 or 3 more streams, we can start backtesting and see how to actually execute positions.
So that means that in 2 or 3 live streams, we'll be actually looking into entries and taking them, or, well,
yeah,
fictionally taking them.
Yeah. We'll just enter the replay feature and start
and load up the millions. Right?
Yeah.
In replay, anything's possible. I've earned myself 3 Lambos already with replay function.
Yeah. It's just to find how to withdraw it.
Yeah, it's just cashing them in. That's the difficult part. Do we have any questions from the audience before we go? I mean, obviously you could still, or if you don't know right now, then again, join our Discord. It's fun. Roman is actively answering everyone's question. And yeah, we've had a few questions, and they are really interesting. So even if you don't know what questions to ask, then it's still interesting to go over to Discord and look at the questions that others have asked that maybe you didn't think of asking. Because this is the session, right? We're learning together. So do come and hang out, and you don't need to be there the whole day. Yeah, just say hi every now and then. Check in and show us your results.
And also, I think tomorrow we will release another puzzle focused on the points of interest. So yeah, make sure to check it out.
Oh yeah, for those who
And
don't
I will
know,
also have
what do you mean by puzzle?
Yeah, the puzzle. No,
I know, but there might be new people watching here. They don't know about the puzzles yet. So last week we had the liquidity puzzles. Well, last week we introduced the puzzles actually. So this is a way to test your knowledge and see how much you've picked up from the sessions from today. So once the new one is added, then by all means go ahead and test your knowledge. And if you haven't started it already, then do the ones that we did from the previous weeks. And if you want to know like what is the theory behind it, come to Discord, check out the previous videos, and watch them back. They're really interesting to watch. You could, and the beauty of watching them back is you can set it to 1.5 the speed, and you'd still be able to follow along quite nicely, I think. So yeah, I don't see any more questions. So yeah, I think that's it. And with that, I wish you a pleasant day. Hope to see you on Thursday for another Ben and Kata session on the webinar. If not, then we'll see you on Discord or next week on another live session with me and with Roman. And I'm looking forward to it because we're getting so close to that. How do you trade this? Where do we trade? When can I enter? Those are the questions that are burning in my, like, I need those answers. Roman, tell me. Now, give me a sneak peek. No.
I told you. There's just one simple strategy I showed you.
Yeah, it's the Quasimodo move, entering and go. Yeah.
I showed it to you like on every stream. This is it. You need the structure, you need the points of interest, then lower time frame reversal, and that's it.
Okay. I'm gonna try that this week.
Yeah, but make sure to check every point of this.
Yeah, I might skip a few steps.
Yeah, if you skip the structure, you'll have losses. Yeah.
Yeah. Okay. Thanks, Roman. All right, people. Thank you for watching.
Thank you.
See you again.